morning. Let's make a brief technical and fundamental study on ROI. We'll start by the charts as usual. Here we have the all history chart. I believe this company was an OTCBB traded stock because it almost had no volume, but volume picked up very strongly here when 2007 began, and so this stock is very liquid now. Let's check the short-term chart. We have this ascending trend line. The stock is above the 50 days and the 200 days moving average, and volume has been very strong here. As you can see, there were, let me see here just a second, not this one, there were 730,000 shares traded yesterday. So the technical trend is bullish. I really like this chart. As for the fundamentals, let's see. We don't have much history in this company, just since 2005 in terms of number of shares outstanding and market cap. And when the company made its IPO, it had 57 million shares outstanding and now 67.3 million. So the share count has been rising at a 12.5% average annual pace, which is a lot, but also usual on recent IPO companies. And the market cap is growing very fast, 79% a year. You can see the market cap was 181 million in 2005 and 542 million now. So very strong growth. As for the balance sheet, here we have long-term debt and the current ratio. The current ratio is very healthy here at 9.58, and long-term debt is about 21 million, which isn't significant for a 500 million market cap company. And cash and marketable securities account for 28% of total current assets, and receivables account for 65% of total current assets. So no problems, no short-term liquidity problems here. As for revenues and gross margin, well, the company had almost no revenues here in 2003, 2004 and 05. You can see $180,000 in 03, 360,000 in 04 and 430,000 in 05. But in 06, the company started getting some significant revenues here, $20.35 million, and for 07 the company's internal guidance is about $50 million. And the gross margin has been around 80% over the years, so I expect that for 07 too. Price to sales ratio is 10.84, so the company is more than 500 million market cap with estimated revenues for 07 of 50 million. But this doesn't necessarily mean the stock is expensive, as we'll see next, because net profit margin in 2006 was 43%. And for 07, I made this estimate in terms of earnings per share because I considered the net profit margin would continue. But it can rise a lot because this company buys royalties in mining companies, uranium, gold, and precious metals and stuff like that. So when revenues grow, a lot of it will be profits. So I expect this net profit margin perhaps to expand to a much higher number. But anyway, keeping this 43% for 07 with 50 million revenues and that 12.5% dilution factor, I get a price to earnings ratio forward of 28.8. But this can change a lot, So on my valuation model, I hope you've been following my analysis and understand this. And so I have to estimate these four white lines: the dilution factor, the revenue CAGR, final net profit margin estimate, and the earnings per share multiple estimate. And estimating this with dilution factor, I put here 12.5%, it's 1.13 here. Revenue CAGRs 100% a year. This year it's going to be more. It's going to be almost 150% in 2007. I expect it to keep growing 100% in 2008 and 2009 because the prices on these metals are rising very fast, and I expect that to continue, and the company keeps on buying more royalties. So I believe 100% for the next 3 years is reasonable, since in 2007 we'll get about 150% revenue growth. Here is where I see net profit margin going to 50% from 43%, but it can be more, it can be 60-70%. Well, not 70 because of taxes. It can fluctuate between 50 and 60%. Earnings per share multiple estimate. I believe a company growing this fast and with this very fat net profit margin should have at least 25 times earnings multiple over the long term. Well, computing all these, I estimate the share price compound annual growth rate going forward to be 38.1%. Anything above 16% I consider attractive, and with this fundamental landscape that I see, the optimal selling price would be 13.61, and the stock closed at $8.06, so I consider it very attractive. On a 1 to 10 scale, I give it an 8. Thanks.